Good morning, everyone, and welcome back to the Daily Health Check Explainer for PLAZM. We are officially on day 225. I'm your host, and today we're taking a calm, data-driven look at how this protocol behaves when the broader crypto market decides to pull back. As you'll see, the numbers today are a really perfect showcase of anti-fragile design in action. We're going to break down exactly how it works and what it means for your broader DeFi strategy.
Section 1. Market Context. The broader crypto backdrop.
Okay, so before we dive into the PLAZM-specific numbers, we really need to anchor our understanding in today's slightly red market conditions. Looking at the macro setup, Ethereum is currently trading at $2,273. It's actually leading the downside today with a 2.22% drop over the last 24 hours. Bitcoin is sitting at $80,487, down just a modest 0.83%. And finally, the Crypto Fear and Greed Index is at 49. Now, while that's technically neutral, it has slipped a point from yesterday, so it's hovering right there on the edge of fear. That overarching market weakness, well, that's our backdrop for today's explainer.
Moving into Section 2, PLAZM price action, outperforming the collateral.
The contrast we're looking at here tells a pretty important story. While Ethereum dropped 2.22%, PLAZM is trading right at roughly 1 cent, $0.0105 to be exact, and it's down only 0.95% day over day. What's absolutely crucial to notice here is the relative strength. PLAZM is actually outperforming its ETH collateral by roughly 1.3 percentage points today. And, this outperformance on a red day, it isn't a coincidence. It's a direct result of the protocol's mechanics stepping up when the rest of the market steps back.
Let's look at how that happens in Section 3, the vaults and bonds, yield and activity.
Let's get right into the raw metrics under the hood. The vault's USD value sits at $493,555, which is a drop of about 2.9% from yesterday. But look closely at the actual holdings. The vault still holds 217.10 ETH. Those ETH holdings are essentially completely flat, dipping just a microscopic 0.05%. So that USD drop we're seeing, that's purely the effect of the Ethereum price falling, not a loss of actual assets in the vault. Meanwhile, the engine minted 6 new bonds today, bringing our total outstanding to 13,577. It's modest, steady activity in a quiet market, which is exactly what a true health check should reveal.
Section 4. The stat of the day, rising bond APR. 31.66%. That steady activity we just talked about sets the stage for our headline metric of day 225. Today, the bond APR jumped nearly a full percentage point, climbing 0.92 points from yesterday's rate. This is a massive stat, especially because it happened directly defying the downward trend of the broader Ethereum market. When the market went down, the yield rate for new entrants actually shot up. For anyone out there looking for strategic entry points during a pullback, this is the anti-fragile metric that absolutely demands your attention.
So why does this happen? Let's walk through the math. It's basically a simple two-part equation. Step 1, the daily yield generated in raw USD terms held completely flat at $428.11. Step 2, because ETH is cheaper today, the vault's overall USD value shrinks. Step 3, when you divide that same flat daily dollar yield by a smaller vault denominator, it mathematically forces the APR percentage higher. It's honestly one of the most fascinating, under-discussed properties of this system. A shrinking vault denominator against a flat yield creates a significantly higher rate of return for new bond buyers.
Section 5. Supply and engine mechanics, burns, staking, and BBB pools. Breaking down the 13.56 million total PLAZM supply, we can see that 58% is liquid, 13% is sitting in liquidity pools, and 9% remains actively staked. But crucially, look at that 20% slice. That represents 3.29 million PLAZM tokens that have been permanently burned, gone forever. Additionally, the total staked shares outstanding actually compressed today by 1.17%, dropping to 8.41 billion. For stakers who are still in their cycle, a lower share count with the exact same yield distribution literally means more PLAZM per share. It's a subtle but incredibly powerful tailwind for those locked in.
And the engine powering those burns, it's doing its thing right here. The buy pool currently holds 1,750 USDC, just ready to deploy. Lifetime, the buy and burn engine has consumed over $81,000, while the buy and build has crossed the $29,000 mark. But I want you to pay special attention to that last point on the list. The buy and grow function, which autonomously creates bonds entirely from yield reinvestment, actually accelerated today. It's now producing 2.36 bonds per day.
slow, methodical, and constantly picking up speed.
And finally, Section 6, the horizon, release forecast and final verdict. With the engine humming along nicely, let's pivot and look ahead to see if there's any incoming supply pressure over the next few weeks. Guiding you through this timeline, we are essentially looking at completely clear skies. On day 225, today, 0 tokens were released. Over the next 5 days, a perfectly flat baseline. We do see a minor blip scheduled for day 231 of about 31,000 tokens, but guys, that is only roughly $340 at today's price. And scanning the next 80 days, 0 cliffs. Supply pressure from emissions remains extremely minimal, which gives a perfectly clear runway for the mechanics we just discussed to operate without friction.
Which brings us to our final verdict for this explainer. Day 225 was a resilient day in a soft market. The data we just went through proves that the protocol's yield-funded engine deploys regardless of broader market sentiment. It doesn't care about the fear and greed index, it just keeps deploying. So, considering how this anti-fragile math literally forces the APR higher during ETH pullbacks, how does that change your perspective on market dips? It's something to think about. Thanks for learning with me today, and I'll catch you on the next explainer.